Hello, everyone. Happy Sunday. This is Simon with AvaTrade, and welcome to our weekly webinar. Well, we're trying to create a plan for the upcoming week. We discussed the past week and trying to make sense of what's possibly happening. My name is Simon Friedman. I'm a senior account manager with AvaTrade. I've been involved with trading for the past 23 years. June 2000 was the time when I started my trading career in New York City as a prop trader. And after doing that for 11 years, I moved on into a less stressful environment. Sometimes I miss that excitement of day trading in a prop firm. And I also started to mentor, educate other traders. And currently, I'm very happy that I have a great opportunity to assist our customers at AvaTrade. Okay, the agenda of the webinar, we go through indices, stocks, commodities, and Forex as usual. Before that, we try to speak about some fundamentals, some events that are about to happen. We go through economic calendar, and so on. Risk warning. You can find a full statement at avatrade.com. Everything we do here is purely educational. Here are our channels that I highly recommend for you to subscribe to. You have Telegram, you have Twitter, and my favorite, as I always say, the YouTube channel, where you can find a lot of information that includes tutorials, educational material, and also webinars that are given by AvaTrade are being recorded and posted at YouTube. So if you ever missed a webinar, don't worry, you can go back to YouTube whenever you have time and you can watch it in recording. Now, if you are watching this on YouTube, please subscribe. If you like it, of course, put some likes. Feel free to share with your friends, and also feel free to write your feedback. Your comments are very important. Okay, so let's start. I hope that we all started the year positively, of course. A lot of people are making New Year resolutions and trying to keep them and everything else. And of course, I want to wish all of us a great, positive, happy year. First of all, peaceful year. I hope all these wars that are happening are going to end very soon and we won't see any others. I know it sounds over optimistic, but everything is possible. So unlike us, the market didn't start the year so great. And as you know, I like to bring these slides here. And this is the article from marketwatch.com. And it says that right here, the S&P 500 first 5 trading days may indicate full year performance. That doesn't bode well for stocks in 2024. And usually I don't copy the article, but this one's a very small one. So we can go through it really, really quick. And these are very, very good statistics that pretty much indicate that the rest of the year it's not looking so pitchy. So let's read it really quick. The S&P 500 movement over the first 5 days of the trading year often provides a good indicator of how it will perform over the rest of the year according to historical data. But if so, that doesn't bode well for stocks in 2024. Historically, the large cap US equity benchmark SPX has been its performance in the first 5 trading days and over the full year correlates in the same directions 69% of the time based on Dow Jones market data going back to 1950. In election years, that correlation took place 83 times. So as you could see, the correlation is higher. The trend has also held true in 8 of the last 12 years and in 14 of the last 16 presidential election years. So it looks like interesting statistics here. These are my comments. This year, the S&P 500 is on the pace to log the 1.8% decline over its first 4 trading days, according to FactSet data. The last time the index fell 1% or more in its first 5 trading days of the year in 2022, it lost 19.44% for the full year. Remember the 2022, right? It wasn't such a great year. I think we went down till October and then we bounced. It could have been worse. So continuing reading here, when the S&P 500 logged gains over the first 5 trading days of the year, it saw the average return of 14.2% throughout the whole year per the market data dating back to 1950. When it was down over the first 5 days, it recorded an average return of 1.3% for the full year. So you can see the diagram here. You can take a look at it. And it looks convincing. Again, I don't want to sound pessimistic here, but statistics, it's a strong thing. And there's another one here just to give you the numbers for the past week. US stocks traded mostly lower on Friday. The Dow Jones Industrial Average down 0.1%. The S&P was down less than 0.1%, and Nasdaq Composite was down 0.2%. So this is serious. Let's see if their prediction or if this year will make another statistic. Now, another one right here, which is serious. We're going to read it really quick as well. The government, this is from Barron's, also on the marketwatch.com site. Government shutdown looks likely. The playbook for stocks is the same. So as you know, there was a leader of the House was changed. So we're going to read really quick. The leader of the House is changed, but the likely outcome has stayed the same. After a short honeymoon following the ascension of Republican Mike Johnson, the Speaker of the House, Republicans and Democrats appear to be stumbling toward a partial government shutdown this month. As with prior episodes, it isn't a reason to give up on stocks. If Congress doesn't pass spending bill by January 19, federal agencies, including Department of Energy, Housing and Urban Development and Veterans Affairs, will at least partially shut down. If the stalemate lasts until February 2nd, which happens to be Groundhog Day, the rest of the government closes. With the House of Senate not back in Washington until next week, there won't be much time. In past episodes, such as last year, the House of Senate passed short-term continuing resolutions that keep government funding at prior levels. While such an outcome is still possible, Johnson has said he would oppose a short-term bill in favor of that funds the government at least through the fiscal year. All right, that's interesting. Again, sometimes market takes it seriously, and then of course everybody knows they're going to work it out, and who knows, maybe this time we will go into shutdown. All right, so so far the beginning of the year doesn't look that great, right? Also, we'll take a look at the Apple stock. Even though the indices are down a little bit, Apple stock is down more than 5% since the beginning of the year. We'll discuss it more. So. And that's #1 company as far as market cap, and it's slowing down, going down. It's actually Microsoft. Looks like it's catching up and about to become #1. All right, economic calendar. A few words about economic calendar. This is public information. You can find it on our web trader or the app. Also, you can search through any third-party provider. It's public information. It's being posted and pretty much from the same source, and you can actually see what you can filter through it. What I do here, I take out the high impact events only. There are more. You should feel free to filter through it, see what's relevant to your trading, time zones, and so on. Okay. So, and one more thing, very important to mention. Sometimes people ask, is it important to follow economic calendar and so on? Again, technical traders don't care about fundamentals sometimes, but I'm sure they still trying to pay attention to what's happening, because simply you can't predict the fundamental numbers and so on, but you could definitely prepare for that as far as getting out of your positions or getting into your position, or simply knowing that a certain day and certain time some serious numbers are going to come out. Like we have NFP numbers, we have interest rate decisions, we have inflational numbers and so on. So it's important to be ready, just in case. All right, Monday, CPI numbers from Switzerland, retail sales from European Union. We have CPI numbers from Japan. As you know, we're getting closer to that move on Bank of Japan, so they are taking this data very seriously. Tuesday, retail sales from Australia, CPI numbers from Australia on Wednesday. Thursday, important data. You have trade balance from Australia, but the most important one is the US Consumer Price Index. This is the first inflation number in this year. Looks like it. And of course, the Feds are watching it very closely, as the whole game, or the name of the game, is Feds cutting or not cutting, or raising, not raising, or whatever they are doing, which is very sensitive for what the markets are doing, what the banks are doing, what the dollar is doing, and so on. So Thursday, right? Friday, we have CPI numbers from China and PPI numbers from US, and Michigan consumer sentiment, also very, very important. We have other numbers in mid-impact. You can check them. I didn't bring it up here, but there's more. There's also, I think on Saturday, there's trade balances from China, which is also important. As you know, China is having difficulties economically. So we'll take a look at China index as well when time comes. All right. So these are the events that our economic calendar has to offer for this upcoming week. All right. So we'll go to the MT4 platform now, and we'll start going through the assets and try to see what's happening. Also important to know that this past week, with the Fed sounding a little bit hawkish in the last announcements when they had the FOMC minutes, it looks like market took it more hawkish, and there was a reaction. Dollar went up, gold went down, and the 10-year yields climbed back up above 4. I think we closed on Friday at 4.04%. So dollar reacted to the upside, gold to the downside, equities sold, of course, or added to the downside move. Okay, so let's go through indices really quick. And we'll start with China. As I mentioned, China had a nice move the last of the year. I mean, the last few days of the year, and then we came right back to this magic level of 11,150, and we are testing it now. So again, it was a nice move here. Everybody got excited. We came right back. So let's see how this week plays for China. With China, as you know, few assets are moving. That's copper, oil, and we'll take a look at them when we get to commodities. Also Australian dollar and New Zealand dollar are very sensitive, as they are cold commodity currencies that supply a lot of things to China. So they are very sensitive as well. So again, we're back to square one, 11,150. If we are holding here, we might do another attempt higher. At least we have a little bit of a reference. This initial move we had on the 28th of December, all the way to 11,527.5, and this remains a support for now. So if we are holding, we might go back up, retest it. So it looks like we're going to be channeling here. And if we did break this week to the downside, start building the resistance here, we might move and retest the recent lows, which is below 11,000, 10,977.5. So we'll be watching that. Another Asian market is really banging its head against the ceiling of 33,500 here. Very sensitive, of course, to the situation with yen, and of course reflecting the global economy or economic situation as well. Now let's move to US indices. As we said, they didn't start that well. We start with NASDAQ. This is the first week. A huge move down. And I think a lot of it to do with Apple stock and other tech stocks. If you look through fundamentals and things that make sense, less comment from the Feds also increased a little bit of a panic of portfolio managers getting rid of tech stocks after having a tremendous year. It was a very positive year for stocks, Nvidia. Most of the tech stocks had a great year. So after booking some nice profits into the end of 2023, it looks like they are unloading a little bit. So that's NASDAQ right here. We're close to the 50-day moving average. We're also close to this strong level of support around here at 16,092. S&P 500 as well. We did break below the previous support on December 20th. We had a huge range day, closed flat on Friday, as we mentioned before. There was a small loss on Friday, but the whole week was a strong sell-off there. And Dow Jones as well. Let's see 1 second. Okay, so December 20th level was broke to the downside on Nasdaq more than on S&Ps, and I just realized that Dow Jones is still holding that level. So this low of 37,388. Let's correct it. If the market continues lower, this would be the first point of reference, 37,388. So Dow is holding stronger than the two others, than S&P and Nasdaq, and it's logical because he actually, even though it closed at the highs, it didn't have such a huge run in 2023. So the reaction to the downside or panic is a little bit less, I guess. So we'll see that if we are continuing lower, we'll see that level being tested soon. Germany, the DAX also had a sell-off week. So you could see on the 3rd, it was a strong sell-off, and then we didn't really manage to bounce. Let's see how this week play for German index. And UK, it didn't make new highs towards the end of the year. So it's the weakest out of major global indices. It looks like it, besides the China, of course. And it did have a weak or a slow week or selling week. I don't want to say weak because it's kind of sounds funny. So let's see what UK index is going to do this upcoming week. And again, just to remind us, we are in a global markets, global economy. So China being weak, it's not just China being weak, it just reflects on all the indices, and of course US indices being weak affecting everything else. So we'll see how things working out, right? So far we established that the equity indices had a strong sell-off, and that's the beginning of the year. And as I read to you the article, or part of the article, it could be that this will turn into a sell-off year as well. And it could happen because we did have a super strong year, 2023. And everything is cycles, right? Everything goes in cycles. So we could have, or we could continue, who knows? Maybe this AI business is going to boost everything else, and it's going to be a new golden rush. I don't know, I'm just speculating here. Okay, let's move to stocks, and I'm going to start with Boeing. Actually, there's a strong issue with Boeing on Friday. Alaskan Airline or Alaskan Air Group, they actually grounded 65 of their Boeing's 737 MAX 9 jet And what happened, that one of the planes actually in the air, his fuselage got broken or damaged, and thank God they managed to return to the airport and land safely, so nobody got hurt. But I'm sure it's going to be an investigation, and I'm sure that we're going to have an action when the market opens, on pre-market even on on Boeing. We might see that reaction. So definitely something to watch. Apple, as I said, um, terrible beginning of the year. So far, it lost 5.9%, and it translates to $176 billion that the company lost in market cap. So a lot of downgrades. Barclays downgraded the ratings. Some other banks downgrade the ratings. And a lot of it to do, as we mentioned a few times, with the slowdown in the sales of the iPhone, which is the biggest revenue for the company. China blocking its products also is not helping. And also, I did some research there, and it looks like Apple lost market shares in the high-end smartphones in 2023. So let's see if they will manage to come up with some solution and bounce here. But again, also the market is selling, so individual stocks are selling on its own issues, and then the market sell-off is actually just pushing things lower. So we are right here on the 200 moving average on Apple. We might see continuation of the sliding, especially if the market continues going lower. And we are approaching the key level of $180. And let's see if that psychological level holds. So far, as you could see, we had 3 consecutive weeks. This past week opened with the gap down and continuation to the downside. Microsoft, as I said, it's funny, I saw an article that says that Microsoft is catching up and about to become number one, but I'm looking at this, it's not really Microsoft is catching up, it's just sell-off of Apple accelerates, so it's just coming down to compete with Microsoft. So anyway, we are sitting here on the daily chart on the 50-day moving average. Just to remind us, I mentioned last week, I believe, that New York Times is taking Microsoft to court, blaming them or accusing them to use their content for training the AIs and so on. I guess we're gonna hear more details there. So far, Microsoft is sitting on this 50 moving average, and take a look. It's the same level that we had this spike back in mid-July, and the high here was 366.57. Just mark it. 366.57. That was the resistance of that spike in the mid of 2023, and that's the same level where the 50 moving average is. So we did try to test it. Take a look. On Friday, we held this level, and as you could see, a lot of fight around this level. So if we do break below and start building resistance, we might see sliding further. And of course, market could always bounce, and Microsoft can bounce with it to the highs from here as well. Now let's briefly run through the big guys here. Tesla, not the strongest one, as you know, lately. It's been having a hard time around these levels. We're sitting on the 50-day moving average as well, around 237. Google also sell off from the highs, or the recent highs. Netflix, as you could see here, it's obvious. We had a test here on 19th of July, another retest of this level, 22nd of November. Then we trade a little bit higher, with back below this 482.5 zone. and we're between that and the 50-day moving average. Let's see how Netflix plays. Amazon back into resistance zone. We were doing well around 155 highs on the 20th of December, and now we've been sliding, sitting on the 50. As you can see, a lot of stocks are sitting on 50-day moving average. Intel, if you remember, Intel had a nice run. We came and rejected this area about around 49. We did move about 50 though, and then we sold last week. So the around 50 area, 49.50 area, it's a resistance. The stock is strong. Let's see what happens. Meta, so you could see here 350, 356, 357. This was the high of 17th of December, 357. The stock is holding nicely, but still moving lower. But what's interesting here in the past 2 days, or the last 2 days of the week, as the whole market was going lower, Meta was bucking the trend. So interesting. Well, let's see if we continue high here, retest the highs, or you will catch up with the whole market and slide lower. Teva, I want to bring Teva actually. You know what? Before Teva, AT&T also bucking the trend. It's moving higher on the sell-off of the market. Take a look. The 3 consecutive positive weeks, we are above the 50-week moving average here, and the stock is holding nicely. So on the daily chart, we just broke about the previous high of December 5th, 1731. So we'll be watching that level. Maybe something's happening, maybe takeover, maybe some good news. But AT&T, after really sitting here for a while, is having some juice or some gas, and it's pushing higher against the falling market. That's a good sign. Like, important to notice these things. As I always mention to you, that the relevant strength is a good thing to spot when the market is selling and there's a strong stock during that time. When the market turns around, that would be the first one to move. Again, nothing is in stone, nothing is 100%, but it's important. And of course, vice versa, when the market is strong and there's a selling stock, would be the first one probably turn around when market sells, right? So this is AT&T. Teva, I just wanted to bring Teva to your attention. If you remember, we've been talking about Teva for quite a while, not every session, but a lot. And if you remember, back then I mentioned to you that Teva's been trading between $7 and $11. It's a nice channel here. So take a look. We're just trying to break above 11, and we are testing this level here of August 7, 2022. This is the weekly chart, and the high here was 1133, and we did hit this past week 1133 exactly. Wow, interesting. So you ready for this monthly chart? That's what I mentioned to you a few times. If we are breaking above this 11 area that we couldn't break for a while, we might see that spike that will probably continue, and there's a possibility if we are breaking out of it. So let me just remove these unnecessary levels. I've been there for a long time. Okay, so if we are heavily breaking on the high volume here, I would really watch the next level, and this was the low of this month, and that's 1529. Let's mark it. All right, so if we are breaking and start building support above 1133, as you could see, it's a 3rd consecutive month going higher. So if we start building support on daily chart above this level, we might actually move higher and retest this $15 area. And of course, potential is huge if we're holding that. Again, I'm trying to be optimistic here, but not really, just realistic technical analysis. If we are breaking through it and start building around here, so the next destination would be the high of this month, June 2018, and that's around $25, right? So that's Teva, important to continue watching. Pfizer also a nice recovery. If you remember here, we closed the gap and continued higher. The company bought Seagen for $43 billion, added to its portfolio of cancer drugs, and increased the dividends by 1 penny to 42 cents per share quarterly dividends, right? And I want to see Uber actually. Uber, after having a nice run, we are having a little bit of a sell-off, which is normal, and we did close this gap. So if we continue higher, we might come to retesting this 55 area zone and maybe a 50 moving average around the same price, right? And another thing, very, very important, before I forget, we're starting the earnings season, and it starts with the banks reporting, and that's JP Morgan, Citigroup's, Bank of America, Wells Fargo, and they all are reporting on Friday. So this is the daily chart. JP Morgan, actually it's at the all-time highs, and it reached the level of October 2021. It took more than 2 years to come back to that level. So definitely this week is going to be focusing a lot on banks. So that's JP Morgan. That's Goldman is not reporting this week, I think later on, but it's also sitting here at the resistance. Bank of America is reporting. Citigroup is reporting. So definitely we'll be watching banking stocks. Just to remind us, if you take Goldman, for instance, it was a sell-off here on the Feds continue being hawkish, and the moment the market kind of took into his head that the Feds are starting to cut this year, early this year, and the yields went down, the banking stocks bounced nicely. They passed the previous resistance here of September, and they came to the levels of November of 2022, and we kind of stuck here, right? As you could see, resistance is holding very, very strongly. So definitely, let's watch banks this upcoming week. All right, so that's as far as equity markets and indices. Let's go over some commodities really quick. You know what? We'll start with copper and crude oil. You remember I mentioned that on China moving lower, copper is reacting, oil is reacting. So as you could see here, copper after a nice run and making a high here, we've been selling this past week. We are on below the 50-day moving average here. Let's see, definitely watching China index with numbers coming in this coming week. And if we are continue lower, we might retest the next level, which is here on the chart, the 200 moving average. So that's copper. Crude oil had actually a positive week. Let's see on the weekly chart. We are moving higher. We're retesting on the daily chart, the 50-day moving average here. Let's see if we continue high over here. So far, the 72 resistance is in place, and it looks like we bounce from it, making a high here. And guess what? The trend is building up a little bit over here. As we just made a higher low. So if this continues and we break above this December 26, which was at 76.16, if we break, that could be actually at least temporary a reversal of the trend. what's the reverse of the trend? We start after making lower lows, lower highs, we start actually building up the opposite, the higher highs, the higher low. So we did establish the higher low here from the previous one. All we need is just a higher high, and then we might be zigzagging higher. Again, it's just a technical possibility. But just to remind us that I mentioned a few weeks ago, and then all the technical analysts start screaming about it. That cross is still in play. That's the 50-day moving average crosses below. That's some technicians or technical analysts are considering it as a bearish signal, sell-off signal. So let's see how it plays out. Natural gas had a nice move to the upside after really breaking again below 250, showing a sell-off here, then start building up. And take a look, we were just talking about the oil. Here, natural gas, it's already in play. We had the higher low and the higher high right here. And we are continuing to the upside. So it looks like the uptrend is in play here. Next up, it could be $3, and that's the level that a lot of actions happened a lot around there. As you could see here, going back, we've been talking about these levels a lot. February 2023, August 2023, then we went all the way to about 350, came right back. So this is another attempt after making a lower low. We might be trying to break through it. And as I mentioned to you, the winter and the weather forecast could be in favor to natural gas. I don't know, I didn't look into it, but we might be hearing some excuses. That's how it usually works. You see the move, and then the fundamentals are coming in and trying to see what's the reason, right? Because it's their job. Okay, let's take a look at coffee, cocoa, and sugar. Coffee had a nice run, and we're back to 182. We did have a golden cross here, the opposite of oil, and that could be a buying signal. And as you could see here, we had a nice correction. We're coming back to this 182 level, which we had a sell-off from here. We had the resistance here, and after a run up, we come back to this level here, and we're also getting close to the 50-day moving average. Let's see if we continue sliding or we bounce and continue higher from here. Cocoa, been talking about cocoa a lot, and if you remember this 42.82 level, after trading a little bit higher but failing to go, we established again or re-established the resistance here by this candle here on the 1st or the 2nd of January. So 42.82 resistance that was retested a few times. Now we need to watch this December 29th low of 49.89. If we do break below it, we might come and retest this 40.95. But just to show us how drastic this move to the upside was. So I'm sure that traders, they're considering a nice shorting opportunity here. And again, at the current levels, we are 82 for $86 to the resistance and $100 to the support and the 50 moving average around here. So we are clearly channeling. We rejected the top of the channel, so it would be logical the possibility of retesting the lows coming up. And of course, we're not going to be jumping ahead of ourselves, but if we do break below, start building resistance below 40.95, we will continue lower. And actually, we could see the impulse because I'm sure a lot of stops are at this level. So those stops can trigger and the sell-off might get more intense. So definitely a good trading opportunities here. Let's see how it plays out. Okay, and sugar. If you remember, we spoke about sugar having a double top here and the sell-off or correction. We had a nice move up to the upside, a reversal right here. So what I would do, I would watch the sugar around here. So this range of this green candle, it's our immediate channel for now. So we are right in the middle. So trading here, some might find risky. So traders prefer to trade closer to the levels. So it's either breakout or reversal here, or pick up at this support and taking to the top. Now, as you could see here, something that gives us a bearish signal again, a dead cross that could mean continuation to the downside. Let's see if that plays out. In any event, we have our channel here clearly between 2044 and 2189. We're right in the middle. So that's as far as commodities. And I think I forgot to mention the metals. So gold is identical to the US dollar. When we get there, as you could see, there was a high range on Friday, and that's the NFP numbers. Again, important to mention that the jobs came higher than expected, which is not so great for the Feds being dovish. They want to see the slowdown. So gold after ranging it's a pretty much high range. We closed a little bit higher here. So again, we are above the 2008. We are below the all-time highs, of course, and below this recent high here. So, and I want to mention palladium before we move to Forex. Palladium, the 950 level, had a nice move. It had rejected the 200 moving average. Then we had the nice slide for about 2 weeks. Now from here, we're in the air. We can come all the way down here and retest it. Or we can bounce from here, establishing a lower low. We'll be definitely watching palladium at these levels. All right, so that completes our commodity review. And let's go to Forex. We start with dollar index as usual. And as I mentioned to you, we had a nice move to the upside as the yields went up above 4% again, 404, and dollar is very sensitive to it. Also, the jobs added to it. So as you could see here, the same chart as on gold, pretty much on Friday, high range, and closed pretty much flat. Open at 102.09, closed 102.13, 4 cents higher than the opening. So we'll continue watching it, of course. We'll see how market takes or translates the Fed's possible decisions coming up. And as you could see here, something also, I don't want to be stuck on this golden or dead crosses, but the 50 is catching up, it's going lower. At some point, it might catch up with 200 moving average, which might trigger some thoughts on the technical analysts, and I'm sure they're going to bring it up. So just to pay attention. Now, let's go through all the majors. And things are pretty much the same as we mentioned last week. The 128 remains the resistance here. On Euro, 110 remains a resistance here. USD CAD had a nice move up. Let's see how that continues. The commodity currencies, Australian and New Zealand dollar, had a strong sliding after a strong move to the upside. And of course, that's on the strong dollar and on the weak China as well. Both aspects are affecting it. And yen, also a nice correction. We are retesting the 145. So we're clearly here, as you could see, this spike to the downside. We're between 141.5 and 145. We are below the 200 moving average here. As you could see, the spike happened. We'll close below. And yen, for me, remains the focus as certain things could be turning points. And just to remind, especially to new people, I'm going to focus on this point a little bit deeper. Just to remind us, the Bank of Japan is the only central bank, a major central bank, that didn't increase the interest rate for the whole these years, and they are holding at negative 0.1%. So some expect as early as March the action. Some already said it might be January. This week we have CPI numbers from Japan. We're getting there, and I always say that the Bank of Japan is very tricky. Sometimes they are famous for sometimes creating these interventions, and they create all these spikes, as you could see here. And they could do anything they like. They could do it before time. They can do it overnight when everybody sleeps. They are famous for it. So a lot of traders, I'm sure, focusing on yen. And as you could see here, the yen is weak against the dollars. The dollar regains its strength on the yields and so on. And if we take a look at other currencies, they're also bounced against the yen currently. And they are facing resistances around this level, all of them. So CHF JPY remains my focus for months, right? And as you could see here, we just rejected, this is the daily chart. We had the all-time high, or at least for the past many decades, the high of 170.48. It could be the all-time high, I'm not sure, but definitely if you look at the monthly chart, we are at the highs here. So this past week, actually on Friday, we did pass through it briefly and close lower. So clearly rejecting that level. I'm continuing watching. I'm sure a lot of traders are watching this pair, as is the strongest move, I think, of all of the Japanese yen involved pairs. So let's see. It's obvious that at some point the Bank of Japan will make that move, and that move could be drastic. So you could see just small interventions create a lot of huge tails, and the moment they start increasing the rates, the yen will start gaining the value, and we might see a nice move. Okay, so that completes the Forex. And just a few seconds on Bitcoin. We're currently trading at almost 44,000, 43,967 bid. Ask is 44,000, so we are at 44,000. And all this move just to remind us about this upcoming issued ETFs on the spot Bitcoin. I think I read last week, I could be mistaken, but I think it's Goldman Sachs that is in talks with some of those ETFs issuers. They're trying to participate as well. So it is holding here. We're far from the highs of 65,000, but as you can see in monthly chart, we are really moving higher nicely, 1, 2, 3, 4 consecutive months. We're still trading below the high of December, so maybe that could be our reference point. All right, so just to summarize what we spoke about, the whole focus was on Feds cutting the rates very soon. The last comment of FMC minutes kind of put that into a doubt area, and market reacted to it. We did start the year with 5 consecutive sessions to the sell-off. As I mentioned to you, or I showed you the article on the numbers, that there's a huge percentage probability that the market will continue sliding this year after signaling this weakness the first 5 trading days. We have some data that we went through. We have inflational numbers this coming week, consumer confidence, and let's see how we proceed. We're getting closer to the Fed's next decision on interest rate. And again, I want to wish everyone a great week, and one more time, a great year, I think. All the best, stay positive, stay in focus, stay in control, plan your trades, and trade your plan. All the best.